All right. Good afternoon. This is Professor Milligan. Welcome to another Wall Street Wednesday. This is Wednesday, June 23rd, 2021. This is my 52nd episode. I've been doing this now for over a year. Really excited about it, enjoying it. So just welcome. Hey, Daisy, how are you? Long time no see. This is, it's been a year. I've been doing this for a year now. It's pretty exciting. What's really interesting about that is even though I've been doing this for one full year, I still get excited every time I come on here. You guys help me stay focused. You help me find things in the market and see things. So I really do appreciate it. And hey, Daisy. Brian, how are you? Welcome. As usual, I'm going to give people a few minutes to join in. While I'm waiting for that, let me put out my disclaimer again. These are my opinions, my thoughts. Let me turn that volume down. These are my opinions, my thoughts on the financial markets. So again, I am not telling you what to buy or sell. If I actually mention something that you find interesting, that you're interested in investing in or trading, please contact your financial advisor, your wealth advisor, your broker, whoever it is that gives you advice on your individual stock trades or security trades, and make sure you get there or have a conversation with them. So again, that's my disclaimer. I'm going to give you my opinions. What's up, Lance? I'm going to give you my opinions. Nick, what's going on? I'm going to give you my opinions on what I think, what I see, what I like, what I don't like. And hopefully from there, that will help you to make some good sound decisions and put some money in your pocket. All right. Richard Rivera, how are you, sir? Ham, what's going on? Ham, your FVRR looks like it broke out of an old trading range and is trying to fight its way back up to that old high. Mustache hairs. Sorry about that, guys. All right, so let me get started. Let me pull up my notes over here. You know, I always write my notes before we start. And Mr. Cornfield, how are you, sir? Welcome, guys. Welcome. All right. So I'm going to pick up where I left off on the Bitcoins. So cryptocurrencies, Bitcoin, yada. So before I go too deep into that, Ham, convertible arbitrage, huh? Yeah, it's going on right now. I think somebody did a convert today. Who did? Was it Cheesecake Factory, I think, did a convert today? I think it was Cheesecake Factory. Somebody did a convert today. In fact, hold on a second. I'll tell you who actually did a convert today. For those who don't know, I'm talking about a convertible preferred or convertible security that can be converted into common stock. Bear with me a second. I'm just looking to see what's going on. What's going on, Twin? So let me see here. Convertible converts. Who did a convert? So I guess it wasn't today. It was yesterday. Let's see. All right. I'm not going to spend too much time looking for it because I know somebody did one. Must have been last week. There's a utility company that just did one. And there's another one. I'm pretty sure it's Cheesecake Factory. But again, I'm going off memory, and I don't like going off memory. All right, so let me take a step back. I know you guys, especially not my generation, but this generation, you guys actually trade Nike sneakers, right? You guys actually, I've seen my daughter do it, seen other people do it, some of my son's friends. So I've seen them where they actually go out and buy a pair of Nikes and then offer them back up on the secondary market at a much higher price than what they paid for it. And they make their money basically buying and selling and trading Nike shoes, Nike sneakers. All right. Let me break this down for you. One pair of Nike sneakers that goes for, $500 that retailed for $100 compared to another pair that retail for $100 that have no aftermarket, in other words, no one wants to buy them, there's not what we call a fundamental difference in those two pair of sneakers. The biggest difference in most cases is basically just color. So if there's no fundamental difference between one pair of sneakers and another pair of sneakers, why is one selling an aftermarket for $500 and the other one in the aftermarket has No interest, no price. No, as we say in our business, no bid. You can't sell it. There's no bid. What that means really is that Nike sneakers basically trade in the market based upon supply and demand. The more people want them, the more they're going to bid the price up. As they bid the price up, the price of the sneakers goes up. That's basically supply and demand. Now you can have two types of demand. They call it basically cost push, which basically because the cost of Nike to make a Nike sneaker goes up, they pass that cost on to consumers. Well, we know this is not a cost push. The other one is what we call a demand push. And that is basically the more demand is pushing the price of those sneakers higher and higher. Has nothing to do with fundamentals, just the demand for that underlying asset. Why am I saying all this? Your cryptocurrencies are a supply and demand currency. All right? That's what's going on right now. Now, I posted an article that was just written. I read it myself and shook my head. I think it was about $1 billion that was stolen from, or they think was stolen from some type of Coinbase platform. It was in Africa where they had, I think it was actually almost $1 billion worth of cryptocurrency that was actually, at first they claimed they were hacked and lost, but now they can't find the two founders. I'm not laughing. I am laughing, but I'm not laughing. I'm laughing because it's a shame. I'm laughing because there's a lot of fraud out here, guys. Please be careful. Your cryptocurrency is basically a trading based upon supply and demand. Now, last week when we talked, I told you that a lot of these currencies were trading right at their support level. I mentioned all of them. Well, every one of them broke that near-term support. They broke that near-term support, went to another support level, and a few of them actually have bounced back up. So Bitcoin right now, Bitcoin closed today. I don't know where it closed. I think it closed at 32, 34. I'm pulling up right now, so bear with me a second. Cryptocurrency, Bitcoin. So Bitcoin closed today at 32.95. Bitcoin tested near-term support at $30. Actually, it broke below $30,000. So it broke below $30,000. It closed there at 32.95. You know, it's still trading right now, but you get, and it's back in the trading range between 32,000 and 40,000. I know I'm redundant. Two things. One, this is why we don't buy dips, first and foremost. Two, when Bitcoin starts to run, you have resistance at $40,000. So when it breaks through $40,000, you could see it push through to $48,000. But this has a lot of work in it. The thing I'm also noticing is that when I'm looking at the futures, by the way, on Bitcoin. I look at the futures accounts, I look at how they trade, and I look at the currencies, the cryptos, and I'm looking at the drop in volume. That leads back to what I said about Nike. Supply and demand is driven by demand, which is volume. As demand increases, they move the price up to attract sellers to satisfy the buyers. When there's no buyers, they move the price down trying to find buyers, trying to make it really attractive because the price is low. Cryptocurrencies are based upon supply and demand. Real simple. Now, the other one I talked about was Doge. Bitcoin and Ethereum actually have, well, most of the cryptocurrencies I'm talking about actually have some business applications, some real world application where they can actually start generating revenue and have a purpose. Doge, as you guys know, has no purpose. All right, it's a meme. It's a currency that's a meme. So as I look at Doge, I'm pulling up the chart now, bear with me a second. And by the way, I kept calling it Doge. They said, no, it's Doge. I'm like, all right, leave me alone. You guys know I am. I make up my own names and my own sayings. It helps me. All right. As you guys know, Doge 2-3 days ago got as low as 16 cents a share. This is off a high of almost 75 2 months ago before Elon Musk went on Saturday Night Live. So it's bounced off that 16 cent and it's right at some resistance, which is old resistance, but it's right at that resistance level, right around 25 cents. If it gets through 25 cents, you'll see some more resistance at 28, 29 cents. I guess my feelings on this are pretty known. I wouldn't touch Doge if you paid me. If you gave me your money to trade, I still wouldn't touch Doge. There's no business application. There's nothing here. I think that ship is finally sailed. I also saw where your boy Mark Cuban lost some money on this, and now he's crying for regulation in the cryptocurrencies. Regulation's coming. I guess the thing I want you guys to know is that as regulation comes, I'm not sure if Doge is going to make the turn. In other words, 2 or 3 years from now, is Doge going to really have an application? All right. I hear people call it a fiat currency. It's not based upon anything. Most of our currencies are not based on anything. And that's the furthest thing from the truth. Anyone that's been around me knows that most currencies are based upon a country's economy and how well they're doing. And of course, they do, as I call, diverge sometimes. In other words, the country could be doing well and the currency goes down, but those divergences typically are short term. You want to really see how a country's doing? Look at how they're functioning, their economy's functioning. The other thing too is actually look at inflation. Inflation has a major play in terms of currency. Without getting into too much detail, why? It's easy. Money follows interest rates around the world. Wherever money can find the best rate with the least amount of risk, they're going to follow interest rates around the world. It's one of the reasons why you'll hear them make the argument that we need to raise rates because we can attract foreign investors. Well, the rest of the world, rates are so low now that foreign investors are still coming here and buying our currency, the dollar, and then using that to buy treasuries. But again, that's what's going on there. All right, that's Doge. So again, Doge, I'm reading right from my notes. Broke down. You got support at 30 cents. It broke that, which is what I told you last week, if I remember correctly. So it broke down, and Doge right now has moved back. Well, new support is at 17 cents, and that's minor support. You got major support at 10 cents. One thing I'm going to say to you guys, just remember this. They call them momentum traders. And the reason why they call them momentum traders is because they go with momentum. For those of you who ever rowed a boat, sailed a boat, you know it's always easier to go with the tide than against the tide. All right? If you did any type of surfing, you look for the big waves, you go with the tide, you go with the waves. So with that said, Doge has least resistance. The point that's easiest to go momentum is to the downside. Let me say it again. Momentum to this is to the downside. It's going to be much easier for this coin to drop than it's going to be easier for it to go up. All right, let me move on. Ethereum. I'm spending a lot of time here, so let me shorten this up. Ethereum, ETH. Bear me a second. I'm just pulling up the chart. All right, Ethereum. You got support at 1800. Oh, I'm sorry. This is the wrong chart. Is that the one I want? Yeah. Some of these charts actually give me the market cap. I don't want the market cap. I want to know what the actual price is of the crypto. So, Ethereum broke support and then it broke right above it. So Ethereum's sitting right on support at around 1800, 1900. It's right around this range. If it can break through and run off this support level, you got resistance at 23,000. It's going to be 2,300 and then 2,600. If it breaks below this support level, your next stop is, as I said, 1,800. If it breaks below 1,800, your next stop is 1,600. All right, those are just technicals. Again, point of least resistance, it seems to have bounced off that near-term support, so you might see some run from there. But that's on Ethereum. Cardano ADA, same story. Bear with me a second, I'm pulling up the chart. Cardano ADA, okay, there you go. Oh, come on. Bear with me a second, guys. I'm just trying to pull up the chart I was using earlier. I can't find it, so let me just go from my notes. Cardano ADA. So you have some major support at 108. You got resistance at 137. You're back in the old trading range a little bit. Like I said, it got, just so you know, guys know, on Monday, Cardano ADA got as low as $1. All All right, so it basically off a high of $2.40, $2.42, basically several weeks ago. So it's in a downward trend. And if you look at this chart, it's definitely in a downward trend. It's trying to consolidate. But again, if it breaks this level here at $1, your next stop probably is about 78 cents. And looking at this chart, if it breaks 78 cents, your next stop is 40 cents. Again, I'm not calling gloom and doom. I'm just letting you guys know that there's not much underneath it. It's easier for this stock. It's easier for this cryptocurrency to go down and go up. The last one is Ripple. These are the 5 I always talk about. And same thing with Ripple. Ripple has major support right where it's at right now. All right, at the 61 cent level is major support. If it breaks the 61 level, I see next major support at 49 cents. If it stays at the 61 cents, it could trade up to resistance, and your near-term resistance is 80 cents. These are the numbers. This is what I see. This is what's going on with the cryptos. All right, I'm going to move out of cryptos, and let me move into commodities real quick. On the commodity side, last week we talked about the British pound. Well, British pound, stay short the British pound, but it's right at its 10-day moving average. If the British pound moves above its 10-day moving average, close out your short position. All right? British pound, short. Canadian dollar, short. Again, if it closes above its 10-day moving average, then close out your position. Either way, when it closes out, if it goes above its 10-day moving average, near term on British pound or the Canadian dollar, you should have a nice profit. Coffee, stay short. Again, if it crosses above its 10-day moving average and closes above it, then you want to close out that position. Now, we also, last week I mentioned Lean Hogs. Lean Hogs, stay short. When I mentioned Lean Hogs to you, and mentioned that short, I'm looking at my notes here, it was around the 115 level. Well, right now, Lean Hogs is right around 104. Bear with me a second, I'm pulling up the chart. Lean Hogs. Yeah, so we mentioned this at 122. Lean Hogs closed today at 104. We're definitely in a major downward trend. If you got short right now at the 122 level, like I had mentioned, basically you're up $550 off of basically when I looked at these options, they were probably around $1,500. I don't remember what month I was looking at, but they were around $1,500. So right now you're up 33% off that short position. All right. Sergeant James, how are you? Sarge. So let's see. Those are the commodities I see right now. Now, James, I'm glad you're on. Reason being is last week, James had mentioned to me SBLK. And we talked about it, told James, I said, not my kind of stock. It looks great near term, great looking chart. Why I bring it up is this, and you guys got to track this. And we talked about this. When corporations that have struggled for years and things finally turn around where they're seeing demand, one of the first things they do is that they actually come to the market and they do a secondary. So I noticed that the Star Bulk Containers actually did a secondary where they issued more stock. I believe it was at $22.50. I believe it was there. Why do I bring this up? So I'll bring this up again for you guys. Follow your stocks, know your companies. Don't be surprised what happened with, like I said, with this Star Bulk. Again, they did a secondary offering. There seems to be a demand, interest in their company, so this is the perfect time for them to come to the marketplace and raise money. And that's what they did. Doesn't necessarily mean that the stock's going to go down. Doesn't necessarily mean the stock's going to continue higher. But right now, where there's demand for it, that's when they raise money. All right. What else did I mention last week? A couple other things I mentioned. SMWB. I'm putting up the chart right now. SMWB. Let me type it in here. I'm going to type a couple in here. How about that? SMWB. I'm going to talk about, let's see who else. WKME. Let's see who else. MNDY, GLBE, AOMR. All right, I put them all up there. So last week we mentioned about SimilarWeb LT Limited. So I mentioned that. I told you guys I thought it was a short at 22. I'm not sure. Let me see where it closed today. Bear with me a second. No, cancel that. Talking to myself. So it looks like this thing closed at $19 a share today. Again, point of least resistance, down. Down. If you got short, stay short. I see more to the downside than I see to the upside. Let's see. The other one I mentioned was WKME, WalkMe. So right now, WalkMe was priced at 31. Stock closed at $30.20. It's trying to push back through that 31. I would stay short. If it does get through 31, then cover your short. But I would look to short this also. Stay short this if you got short. Let's see. MNDY, Monday. Stock is not, the old high was, bear with me a second, I'll even give it to you. The old high was $232, no, $237, sorry, and 50 cents. Closed at $233.25, basically $4 off the old high. Volume's pretty decent. So again, like this one, I think a move through the 237, which is the old high, would be a buy indication. For those who don't understand, again, this is an ADR. So this company does trade. It's an ADR, it's a foreign company. What else do I have here? We mentioned this. Global E Online. So since we last spoke, the stock set a new high today, basically at $59 a share, and then backed off. So the stock set a new high today at $59 and then backed off and ended up closing at $55. I would like to see a period of consolidation, going sideways a little bit, trading in that trading range, probably between 55 and the old high 59. Trade sideways for a bit, and then on the breakout through the old high 59, I'd be a buyer. Yeah, I won't. Thank you, Jim, for this. I forgot FIGs. I did look at FIGs. I just didn't write it down. For those who, let me type in again. Jim was asking me about FIGs, so I have no problem doing that too. All right. AOMR. AOMR. IPO came out. Of course, I don't have it, so bear with me. I'm going to get the statistics on it, the stats on it. Let's see. AOMR, where are you at? There you go. Angel Oak Mortgage. The deal range was $20 to $21 a share. They priced it at 19. And if you pull up the chart on it, they priced it at 19. And the highest the stock has been right now, which was the second day of trading. Hold on a second. Come on. There you go. On the second day of trading was $18.94. It's a short. Short it. Short. It's a short. Can I say it again? I think it's a short. You guys know how I feel. Anytime you have an IPO that's priced and doesn't hold its IPO pricing and starts to trade down, it is a short. All right, that's my opinion. I'm also looking at who the underwriters are. They're not known for their strength. They're not known for running deals up. I, again, would this is a one to look too short. If the stock does break through the 19, then I would cover. So look at it this way. If you can get short at $18 a share, you get $1 risk to the upside. The way I measure risk is this. If I'm willing to lose $100 on this trade, I mean my stop would be at $19. If the stock hits $19 on 100 shares, I lost $1. There it is. All right, that's how I quantify risk. Let me say it again, because I know I said it fast, but let me say it again. Stock AOMR, Angel Oak Mortgage, priced at 19. The high is $18.94. I said the stock closed at 18. I have no problem shorting this stock at 18 and using a stop buy at 19. If I'm wrong, I'll lose $1 per share. All right. If you're willing to lose $100, then you buy 100 shares. If you're willing to lose $1,000, you can buy 1,000 shares. I quantify my risk. That's what I'm doing right now. So if I actually get short this stock, I would again put a stop in at 19. And in theory, the most I'll lose is that move to the upside, which is $1. Again, those who understand stop losses know that stops don't guarantee price; they do guarantee execution. So that's what I would do. All right, figs. I forgot my figs. Figs has been trading well. It broke out from 36. Now here's where you got to get into your numbers. Figs broke out from 36 and ran from 36 to a high of 50. So 36 to 50 is a 14-point move. A 14-point move, and today's 49. A 14-point move, all right, 36. Half of that would be $7 off of 50. That would take me down to about 43. I would expect this stock to trade, follow me now. I would expect this stock to pull back to around the $44, $43, $44, $42 range. All right. You had a nice run. I'm not saying the run is over. I'm saying you have a nice run off of some really good volume over the last 3 days. But again, going back to just supply and demand. All right. If they don't see demand to keep pushing and push this price up, they're going to lower the price to try and attract people to at the lower price, attract people to buy the stock. So I would expect it to pull back. A pullback in trading sideways for 2 or 3 days or 4 days would be nothing but really bullish for the stock, and then to move back up through 50. So if you're in it, you might want to take profits. If you're looking to get in it, let it consolidate, and then on the next move, buy it. By the way, that's the same theory on Monday. I just put that stock back up. Same theory on Monday. It ran, and now it's going through a period of consolidation. And that consolidation might not, oh, come on. That consolidation might, I'm looking at this thing. That consolidation might take 3 or 4 days, and after that, the next move. And especially if there's volume behind it. All right. Two other things real quick. NASDAQ setting new highs. It looks like the techs are trying to make a run this summer. NASDAQ at a new high. Apple, $2 trillion business. Microsoft, $2 trillion business. So again, with both of those I'm pushing. Keep an eye on those. Just so you know, long term. I brought some Apple here. Long term hold in the portfolio. Just went and brought some more Apple. All right. One other thing. KB Homes reports today. Report on the close. I'm not sure if they report already. Probably report already. I'm not really concerned about KB Homes in terms of the earnings right now. My recommendation is that you go and read and listen to KB Homes transcript. For those who don't know, every time a company reports quarterly earnings, they come out with a analyst update where they actually, what they call an earnings call, where they actually get on a conference call and they talk to analysts on Wall Street about their company. They also have these transcripts printed. You can go to the company's website. You can also go to barcharts.com. The number of sites you can get this. Seekingalpha.com is where I get my transcripts from. So anyway, with all that to say is, you want to read the transcripts to see what KB Homes is saying about the residential real estate market going forward. All right, here's where you want to get your information. You want to listen to the builders who are building homes talk about what they see going forward. It's going to be key to help you understand, because yes, rates are low, prices are down, but it seems like buying has actually slowed down. It looks like investors or buyers are saying there's a certain point that we're not going to overpay for houses. Again, you want to get an idea of what's going on in the housing market, listen to this conference call. I'm going to actually pull up the transcripts and listen to and read them myself. So I wanted to bring that up. All right, somebody's asked me about Ford. Should I take my profits or hold on Ford? You know, I don't tell people what to do. I'm laughing as I said, I don't tell people what to do. My whole education strategy has always been, as a professor, was not to tell you what to do, but to teach you what to do. So I'm going to look at this and give you what I think, what I say I would do. So I'm just looking at, I'm pulling up a chart on Ford. Bear with me a second. I'm looking at I'm going back. So one of the things I tell people, which I'm telling you guys, is anytime you're looking at these companies and you're not sure if you should buy or sell or what to do with it, I'm going to tell you what I do. I stay in the moment. I literally will pull up the chart, which I'm pulling up the chart on Ford right now. And as I pull up this chart, I'm going to analyze the chart where it is and what I would do. So Ford broke out of a resistance level at 13 and change, ran a little bit. It ran from basically that old high of 13 and change to the new high of 16 and change. So it ran 3 points to 16.40, half of 3 points is $1.50, so that would take you down to $15. And guess what this thing did? It came back and traded as low as 14.50, which is the Fibonacci's, and retested that gap, that range. All right, not surprised. I would stay with this. I would, near-term support is at $14.30. If it breaks that $14.30, I'd probably get out and take my profits. But I'd stay with it right now because you're right in the middle of a trading range. And if it holds up and volume kicks in, it should attack that old high around 16.28. So right now where I'm at, I call this my point of indifference. It hasn't given you a reason to buy anymore. It hasn't given you a reason to sell it. I would stick with it. And again, yeah, I would say, depending on how much profit and what you paid for it, I would say $14 and change is support near term. There is a little gap between that 14 and change and that high 13. But it looks like it came back and kind of tested that. So maybe it doesn't fill that gap. But right now it's in the middle of a trading range. I would stay with it right now and just wait. Gary Brown, how are you, sir? Long time no see. All right. That is everything I had on my list to talk about. So if you have any charts, anything you want me to take a look at, feel free. Again, I missed global, GLB. I know I'm redundant. I talked about it already, but I missed it. I saw it and I missed it. It's been a really busy week for me last week and this week. And I proudly say, just so you guys know, it was my wedding anniversary on the 21st. And my wife and I have been married now 35 years. We've been together 40 years. I met my wife in college. So it kind of distracted me a little bit, making sure that we celebrated a wonderful achievement of ours. All right, any stocks you guys want me to look at? I looked at Ford. I looked at G2. How are you, sir? I didn't realize you were here. G2, how are you, sir? All right. So let me pull up a couple that you guys always ask me about. FVRR, believe it or not, it bounced off of that support, that bounced the trading range. You got as low as 157, bounced off that, traded above its resistance level at 187. It traded sideways between 197 and 210 and broke out to 210, and it's challenging near-term resistance at 238. So FVRR is challenging. Oh, thank you for that. Happy anniversary, Gary. Thank you. It's challenging. It's actually sitting right here at support. And by the way, I'm pulling up the symbol I'm talking about. It's sitting right here at near-term support, 238. If it does push through this, it looks like your next stop could be 250 on its way to 260. But again, and if it doesn't hold this, I don't see why it wouldn't, but if it doesn't hold this, you could probably see it trade back to 212, FVRR. The other one, I pulled this up too, just to mention. We talked about this last week. Stock split accumulation. Well, once again, NVIDIA is sitting literally, I'm pulling it right now, closed at 762 today. And your old high, intraday old high is 741. I'm sorry, that's the wrong number. The old high, intra-high is, no, that's it, 741. Intraday. No, I take that back. Intraday was, I'm on the wrong one. There it is, thank you. Intraday was 775. 775, I'll take a look at Tesla, not a problem. Near term was 775. So, I mean, that's your resistance. So you're right there, stock split accumulation. I'm not sure when the stock split is due, but the stock is running. Stock is running. All right. That's NVIDIA symbol. Let me put it up here if people ask and make sure you know what I'm talking about. NVDA. Stock split accumulation, trading really well. It's run. I would not be surprised. Well, it's run. So you're having some backing and filling. So you might not have that much backing and filling on this, because it's actually backed and filled a few times since it's made that run. Yeah. All right. Let me do Tesla real quick. All right. Before I get too deep into Tesla, let me pull up a monthly chart. I got to pull up a monthly chart. One of the things that happens with companies like Tesla, and the reason why I pull up a monthly chart is because the stock's made such a big move over the years. All right, got that. Now I'm going to a weekly chart. And again, let me explain for those who don't understand, the reason why I go to a monthly and weekly chart show less volatility. Daily charts, the more frequent the pricing, the more volatility you're going to see. So if I compare a minute chart to a daily chart, the minute chart's going to have much more fluctuation. I compare a daily chart to a weekly or monthly chart, the daily chart's going to have more fluctuation. So I'm pulling up a weekly chart on on Tesla, and it's doing exactly what I thought it was. So you had near-term support at 555. It's hit this twice. Boom, once. Actually, it went through it, then it hit it again. So you have near-term resistance at 555. You're in the middle of this trading range at 657. And then you have what I would call some minor resistance at 743. Minor resistance at 743 with some major resistance at 785. So Tesla's got some work to do. The other thing I'm looking at, though, is even with these last runs over the last 3 days, when the stock bounced off that 555 and ran over the last couple of days, volume's been really light. One of the things I know I say this a lot, you want to look at volume on breakouts to the upside. You really want to see volume. All right, that's Tesla. Hopefully I answered your questions. And again, it's in the middle of a trading range. Right now, you're in no man's land. If you buy it here, I'd put the stop loss right below that 555 range. I'd put it somewhere around 550, somewhere in that range. And again, based upon just technical analysis, at 740, you're going to have resistance. 740, 740, around that range. So if you buy it here, that's what you're looking at. 740 to the upside, 550 to the downside. All right. Let me, real quick, I apologize. I'm on Tesla one more time. Yep. I stick with my numbers. I'm sticking with them. I'm looking at daily chart. Yep. That 700 is going to be near-term resistance. Yep, right where it is right now. 700 near-term resistance. If you get through that 700, your next stop is 800. All right, KNDI. Again, I'm going to a monthly chart. Woo. You know, when a stock has volatility in a monthly chart, that's when I go, woo, scares me. All right, so I'm looking at a monthly chart. I don't know what this company does. Switching to a weekly. Switching to a weekly, and let me give you get some more view. All right, I can't give you too much long term. I can tell you this, I'm looking at a weekly chart. You got some major resistance right around this $8 number, 8.35, and even more resistance up through this 9. So if you get through this 8, if you get up to this $7.50 range, if you get above 7.50, you're gonna hit a whole bunch of resistance going back several years. Let me switch it to a daily chart. Yep, I'm sticking with my numbers. Daniel, I'm trying to be polite about this. I wouldn't touch this thing at all. There's so many other good quality things that are trading so much better than this. You got a whole bunch of work in front of it. There's a whole bunch of stock. You know, earlier in my call today, I talked about, you know, surfing and paddling and, you know, swimming with the tide, and how much easier it is to swim with the tide, go with momentum, then go against it. And this thing not only has no momentum behind it, there's a whole bunch of pitfalls as you move up. I don't have an answer for you. I really don't have an answer for you what I would do here. The problem I have is I would never have brought the stock, so I'm not sure what to do with it. I'm just not sure what to do with this. Wish I had an answer for you. So, Andy Cornfield, you like the gaming stocks. You like the gaming stocks. I haven't looked at these in a long time. Again, I went to a monthly. Right now I'm on Take Two. So I'm looking at Take Two, Activision. I'll look at both of them. So there's Take Two. I'm looking at the monthly chart. Not bad on the monthly. Take Two on the weekly. All right. Here you go. This is easy chart to see on the weekly. You've got near-term resistance at 188, right there. That resistance that you have is the old support when the stock went to the old new high, which happened back in January. So this 190 level is your resistance, which will become your support again. If it breaks through this 190, I'm talking about Take Two. If it breaks through this 190, that will be support. And then your new resistance will be the old high, which is 214. Right now, it's in this narrow trading range. If you're in it, I'd stay with it. If it breaks below this 164, 65 number, your next stop probably going to be right around 150 to 135, in that range. Yeah. If it takes out this 188, 189 number, you should see it challenge. You know, you see it challenge that old high of 220, 216. You'd like to see some volume behind it. That's a weekly chart. I'm almost positive my daily chart's going to give me the exact same read. Yeah, it is. Yep, exact same read. That's Take Two. Let me go back to a weekly. And the other one was, bear with me a second. Oh, Activision. Same type of story. Activision, though, has supported $90, right around here where it's at. Yeah, right around here. It's really sitting at near-term support, right in this range. If it breaks this 90, your next stop, your next support level is somewhere around the 83, 84 level. On the upside, you got some resistance at 99. If you take out that resistance at 99, you should be able to take out the old high, which is right around 105. So right now, both of these gaming stocks are at their second level near-term support. There's not much resistance to the upside. It's been minor, but if it does get through that resistance, it should actually challenge old highs. TTD. Let me see. Guys, I'm going in order, so I apologize. Somebody's asking about TTD. 10-for-1 stock split. After Apple and Tesla split, the stocks dumped on a few days. Wondering what your take is. All right. I'm looking at a weekly chart. This thing's doing a 4-for-1 stock split. Why? Why is it doing a 4-for-1, a 10-for-1 stock split, excuse me? So they're trying to bring the stock price back down on a 10-for-1. They're trying to bring the stock price down to, did they do a 10-for-1 or are they about to do a 10-for-1? If they're doing a 10-for-1, they're about to bring the stock price down to $6 a share. Why would they do that? I do not know. That doesn't make sense to me. Let me switch to a daily chart. Stocks near term since, I believe, well, that's the problem. Hold on a second. Let me switch to a monthly. Okay, that's what I thought. Since this stock hit a new high back in December 2020, you have what we call lower highs and lower lows. So since the stock hit a high back in December 2020, the stock's been in a downward trend. It's tried to bounce off it, and you got major support here at $50 a share. Now again, any numbers I'm giving you, divide them by 10 after the stock split. That's what you're looking at. So if the stock supports at $50 after the 10-for-1 stock split, support would be at $5. So you have it bounced off that major support at $50, and now it's back. It's literally back into an old trading range between the low 60s and 75. Yeah. What would I do with this? Well, you asked my opinion, so I'll give you my opinion. I wouldn't do anything with this. Don't like the company. Not interested in it. Again, nice chart. Stop. Talking to myself, not you guys. Come on, work with me here. All right, you're not going to work with me, so I'll do it this way. I'm just looking at the chart again. Bear with me 1 second. Check my time. Okay, cool. Yeah, I'm looking at the chart going back, the historical chart going back to 2017 when this company went public. And the last, yeah. I wouldn't, again, they're splitting 10-for-1. I'm not sure why they would split this 10-for-1 and lower the price stock down to $6 a share. It's in a downward trend. It's right at near-term resistance, support. I'd like to see it do some work here. Other than that, I'm not big on this. I'm not big on the company right now. All right, let me see what else. Bear with me a second. I'm just looking. Oh, so it already split. Cool. Why is my screen not showing splits? That's annoying. All right, anyway, thank you for that. So the stock split 10-for-1. They've already split. The run came before the split. I'm not crazy about it still. So if they already split, here's the deal. My opinion, I jump on it when it moves back through 100, the old high. I take a look at it then. All right, bear with me a second here. I talked about Apple. DOT got added to Coinbase. DOT, huh? DOT must be a cryptocurrency. Let me see. I'll find out 1 second. DOT. There it is. Well, whew. DOT is sitting right at major, no, I shouldn't say major, sitting at some near-term support right in this range. This support goes back to January this year. Goes back to January this year. If it gets through this, if it bounces off this support level, near-term support, you've got resistance sitting up here at 0.00055. Let me put it this way. them being listed, DOT being listed on Coinbase, I don't think it's going to have a major impact on the way this thing is trading right now. It might bring some more liquidity to it, or might bring some more traders to it. But based on looking at the volume, looking at the way this thing's trading, it's got a lot of work to do. A lot of work. You know, one of the things, give me a second. You're thinking about getting out? Well, the only thing I can say to you is you're sitting right here at near-term support. So if you, depending on where you got in, it hasn't broken. It's come down here, hit it, and then today it bounced and rallied up a little bit. So all I will say to you is that I might stay with it a little longer to see if it's actually going to break this near-term support. Again, it depends on how much money you have in it, how long you've held it, and when you purchased it. But you might see a little bounce here. But like I said, there's the point of least resistance is to the downside. Somebody saying take two looks like a head and shoulders. Yeah, I looked at that. Bear with me a second. I'm hopping back. Yeah, especially when you pull it on a weekly chart. If you put it on a weekly chart, it definitely looks like a head and shoulders. For those of you who don't know, head and shoulders is a very bearish, very bearish chart pattern. And I'm looking at a weekly chart and you can see it. Cancel that. Now let me go to a daily chart. Come on, stop. All right, bear with me a second. I'm still trying to get to this. You know what? Let's do it this way. That's what I wanted to see. Thank you. Let's zoom out. Yeah, head and shoulder. Take two had head and shoulders, but that it bounced out of that. So the left shoulder was over here that ended basically back in November 2020. Then it ran, and your neckline. A lot of people think your neckline has to be straight. Your neckline came right here. When it came down in March and tested this 161 level, and then later on in April went up to 185, and then came back to this 161 level, that was the neckline. It tested it. It fought back up and went to that 184 level, and right now it's in the middle of a trading range. So it didn't break down there. So it was a head and shoulders. I'm not sure what we're forming now, but it bounced off that neckline back in May. Bounced off that neckline around May 13th and then ran back up to 187. So you're in the middle of a trading range again. Yeah. And there it is. That 187 is major resistance. You got to get through that 187. If you get through that 187, you got more resistance at 194. All right, let me see what else I have here to talk about. Let's see. Did I get everything else? I got that. Apple, Tesla. Okay, I think I'm up to date. So now I'm asking about another cryptocurrency. SOL. All right, let me switch this to a weekly just to see. All right, I'm looking at a weekly chart. Right here at the 28, 29 level where you're at is your near-term support. And what's interesting is it's broken that twice, and actually it broke it again this past week and tested that major near-term reach support at $19.58. So you got $19.58 as your major support. You have near-term support where it's at now, 28.76 in that range. And if it can get through that, I think your next stop would be, believe it or not, would be 40 cents. $40, not 40 cents, sorry. All right, let me make this chart a little bigger. I stand by my numbers. I stand by them. Yeah, you had some, this thing came down and tested support, major support at right around that $19 level, just below the $19. It came down here 3 times intraday, tested it. You got some minor support at 25. And I'll even narrow my resistance down. You got resistance at 34.50. And you got major resistance again at $40, $41.42. Yep. One of the things I would say to you guys is that with these cryptocurrencies, when you trade them, track them in terms of price and track them in terms of volume. The other thing I'm going to say to you is, just in a normal currency with volatility, I play for a 10% swing. So let me explain what I mean. If it's a $40 stock, a 10% move to the downside would take it to 36. I have no fear of that. A 10% move to the upside would take it to 44, from $40 stock. That's a 10% swing. It's not a big problem. On the cryptos, you might want to go to 20% to the downside and 20% to the upside. So what do I mean? If you buy a crypto at $40, you might want to use you look at your first major support level or resistance or stop, your stop, 20% below that. So I would put it at 36 and go, not 36, 32, and then go from there. And these things seem to move 20% in a day is not a big move. So even though they're more volatile than what we've seen in the stock, the cryptos have seen that a 20% swing to the downside or to the upside is pretty much within its range. So what I'm saying to you is adjust your cost basis, adjust how much you're buying on how much you're going to lose. Again, if I'm buying a crypto and I'm willing to lose $100, then $100 and I know there's a 20% swing in it, I'm going to base my size position on a 20% move that would have cost me to lose $100. Is that making sense? So let's say some real simple math. $40 stock, 100 shares, all right, would be a $4,000 investment. The most I'm willing to lose is $400, which is $1 a share. So if I buy it at 40, I'm gonna probably stop myself out. That's kind of narrow, but I would stop myself out at $38 a share. Now, $38 a share on 100 shares would be a $2 move, would be a $200 loss. But you get what I'm saying. I build my size based on how much I'm willing to lose on the transaction. Now I'm looking at my time. I gotta hop. I appreciate you guys. Once again, thank you for stopping by. If you have anything during the week, text me, email me. I love to talk about it on the show. Gotta hop so I can say this. Have a blessed day, guys, and I'll see you next week. Thank you. Thank you.